so we are back, and now we're heading into the land of streamlined offshore procedures. Streamlined is not an offshore voluntary disclosure, but it's rather a procedure in which to disclose previously undisclosed foreign assets and income where you are non-willful. So, our first form is Form 14653, certification by U.S. persons residing outside of the U.S. And let's talk about that a little bit. So this is a form that the person is signing to say, what are they certifying?
Basically what they are certifying, and this is an item of some debate, but what they are certifying is basically the amounts of tax that they owe, and they're certifying their narrative, their statement of facts on why these assets, these accounts, and the income wasn't declared previously. And as part of the Streamlined program, taxpayers have to amend their tax returns for the past 3 years, or for the Streamlined foreign offshore procedures. Many people residing outside the U.S. didn't file their returns, so they have to file original returns for the past 3 years.
All right, so let's look at some of the problems of this certification form then. So let's start off with this first one. Something about a statute of limitations?
Yes. When going through the program, as I said, you have to file either original or amended returns for the past 3 years. Now, with original returns, the IRS has no statute of limitations to assess additional tax, so a statute of limitations really doesn't come into play there. But for people who are filing amended returns for the past 3 years, there's a very narrow category in which taxpayers could be asked to provide amended returns that the IRS will never be able to process. So for a person filing, for example, a 2011 tax return.
And we're going to say, well, in today's date is October 16th, 2015. So for this fact pattern, that's what we will assume. Mm-hmm. Okay, so continue.
Well, we would have to assume prior to October 15th.
So prior. So we're going to go back in time to
so really
October
where
14th.
It comes into play is the measuring time period for the Streamlined program as it corresponds to the tax returns. For the Streamlined program, you decide what are the past 3 years by taking the most recently passed due date for filing your tax return. Whichever one is passed the most recently, that's the most recent year in your 3-year period, and you go back 3 years from there.
Okay.
So let's say somebody filed an extension for their 2014 tax return. So we're after April 15th, but they have until October 15th to file their 2014 tax return. But normally they file their tax returns by April 15th every year. Mm-hmm. Many of our clients are in that situation. So let's say we reach June of 2015. They filed an extension for their 2014 tax return. Now they're going to be filing their streamlined submission, including tax returns for 2011, 2012, and 2013, because the due date for 2014 hasn't passed for them yet.
Because that's still not coming till October 15th.
Correct. That one's still timely if it's filed today. So they're doing 11, 12, and 13. Well, they filed their 2011 tax return before April 15th. The IRS only has 3 years to assess additional taxes.
And so it's June.
That expired in April 15th, 2015.
So we are two we're 2-3 months after the ability for the IRS to assess this.
Correct. So we send in an amended tax return for 2011 along with full payment of the taxes that would be due if the IRS could process their tax return, and the IRS sends a letter stating we can't do anything with this return. Now, streamlined submission is still accepted. Taxpayers very happy. They get to get a refund of the amount they paid with the 2011 tax return. But they had to incur the expense to have a tax return amended that the IRS couldn't touch.
So, but I mean, if you're going to do it, you have to just, can you do a submission and just include the 2 years to say, hey, look, you guys aren't even going to be able to process this thing and take this money, so you have to do it anyway.
You have to do it anyway.
Okay. And so that's really, I think maybe, that would help things out if we could fix that.
Correct. Just some clarity on what to do in those situations.
Gotcha.
Currently, the Streamlined form contains a requirement that you maintain your records for the past, or I'm sorry, once you make your streamlined submission, you agree to retain the records for your foreign accounts for 6 years from the date of your streamlined submission. However, the actual statutes that the IRS is relying on to require people to maintain their foreign account records start from 5 years, not from the date that your FBAR was filed, but from the date that your FBAR was due to be filed, regardless of whether it was filed or when it was filed. So this is actually asking people to keep their account records beyond the time period that the IRS would have to assess any penalties as a result of not having those records. So it's sort of exceeding its statutory
authority, right?
Thank you.
There's no, and this is the problem. You know, the entire problem with this is people are reading far more than the IRS, I think, thinks they're reading into things, as we discussed before. And what you need to do, what the IRS needs to do, is have a clear set of rules and guidelines, and the rules that can't be changed. Because when you do that, now I know what's going to happen if the IRS did, try to assess somebody a penalty for that after, according to the streamlined certification, it just wouldn't fly. It just wouldn't work. That's just what I would expect. But the perception on the public is like, wait a second, you guys are changing the rules all around here. I don't know why I should go through this program if you're going to kind of continue to change it. So again, having some consistency and following the law in the forms would be really helpful.
Yes. And it incorrectly educates people about what their requirements are. So confusion is never a good thing.
That's right. So what else do we have on this form? Estimate of burden? What's that about?
Well, on every federal form that you would ever have to submit, the agency who's requiring you to submit the form has to make an estimate of how long it's going to take you to prepare the form that they're asking you to do. And the issue that I have with these forms is virtually every offshore voluntary disclosure or streamlined form states that it takes 2 hours to complete. Every one of them. And the streamlined domestic offshore procedures, which contain a very detailed penalty computation, which Attorney Hansen will be going over in a minute, states that it takes 2 hours. The streamlined foreign offshore procedures, which is the same exact form but without the penalty computation, states that it will take 2 hours.
The same time.
The same amount of time.
Even though one has far more work involved.
Correct.
It's the same amount of time. So that would lead us to indicate that maybe somebody didn't pay all that much attention, and maybe there was a copy and paste
Or
involved.
more like somebody said, I'm required to list an amount of time. I have no idea how long it'll take,
Okay.
so I said 2 hours.
Okay, so you're this doesn't help, again, create the correct impression that the IRS might be looking for right
Correct.
here. Okay.
The IRS imposed what seems to be a very reasoned requirement that people going through the Streamlined program, if you filed your tax returns jointly for the past 3 years that you're going to be amending, you both have to be non-willful.
Okay.
And you both have to qualify for the Streamlined program that you're going through. So if you're residing outside the United States, both of you have to have resided outside the United States. Otherwise, you would have to go through Streamlined Domestic instead of Streamlined Foreign. Well, this is a very wise thing. But in today's world, many people get divorced, get separated, or somehow are not able to go through the program with their spouse. And currently, the program guidance does not address that at all. So much like with the offshore voluntary disclosure program language, it can discourage someone from wanting to go through the Streamlined program because they're divorced from their spouse.
But somebody could.
You can.
You can.
If you call into the Streamlined hotline, which we'll address in a minute,
Yeah.
If you call into the Streamlined hotline and tell them, listen, I got divorced from my husband and I have to declare my offshore accounts, but he's not going to go through the program, but I was non-willful, they'll tell you you can go through the program by yourself, but the actual eligibility requirements tell you you can't.
Wow, so somebody could get the total wrong legal advice by looking at the form.
Correct.
And so you have to dig a little bit deeper to find the real answer. That is really consequential.
Or the people answering the Streamlined hotline are incorrect.
Oh, right.
And they don't know what the requirements are. So
And they might
that's
just say-
always a possibility we have to consider, is that the representative answering the phone doesn't know the right answer. So the IRS specifically addressing the situation is vitally important to many people.
Indeed. So we're still on form 14653, certification by U.S. person residing outside the U.S. Now we mentioned something about the Streamlined hot number. You want to discuss that? What's with that?
You can look at every IRS webpage that discusses the Streamlined program, and nowhere will you find a reference to an IRS Streamlined hotline. They don't give any phone number to call for questions or concerns about the Streamlined program, but I know one exists.
Okay.
And I know one exists because it is the same as the Offshore Voluntary Disclosure Program hotline, where you can call to get information about the OVDP program. Now, because we've been using that phone number when we have questions that the released guidance doesn't address, we'll call that phone number to get the IRS point of view on things. And so when we called after the Streamlined program was announced, their introduction changed to say it was the Offshore Voluntary Disclosure and Streamlined hotline.
Okay. But they never made a Streamlined specific hotline.
Well, and they don't really need to. It can be addressed by the same group, but nowhere on the IRS website does it give people the phone number to call for Streamlined
Gotcha.
questions.
Just to say, hey, call the same OVDP Streamlined hotline.
Correct. So
That
if
would
you
be
have
nice.
a taxpayer who's going to represent themselves, they're the ones most in need of that hotline. Is the person trying to go through this on their own? They need that guidance because they don't have experience with doing tons of these every day. They're your target audience for that hotline number, and they right now can't find it. Or don't. I've had people argue with me and tell me there is no Streamlined hotline. Clients or PTCs who
sure.
I'm giving advice to,
Yeah.
I say, call that. There isn't one. Well, there is.
There
You
is.
just don't know it.
All right, a little inside trick there. Next thing is that the taxpayers must self-compute interest. That there's no online calculators. And now I know from our own experience, calculating what your interest due to the IRS is something that is rather crazy. So crazy, we don't do it. We have our own third-party software we use. So that's something that isn't there. So how does a taxpayer compute their interest?
I don't know. My guess is many unrepresented taxpayers guess.
Okay.
The ones who are more savvy about websites might go online and look for a normal interest calculator like you would use on a car loan
Okay.
and try to do that. But the IRS offers no resource for people trying to self-compute the amount of interest they're going to owe on their additional taxes, but they ask you to do it anyway.
Oh, that's very
So
nice.
give people the tools they need.
And I see two ways of delay there. First of all, somebody underpays interest, and so they get a bill, hey, pay the whole interest, or they overpay, and then there's a refund that needs to be processed.
And
So,
it takes a long time to process those refunds.
and it takes that's great news. So that'd be helpful. We have this is one that we get a lot of, and this is something that we deal with. We've developed our own process that there is no streamlined pre-clearance process.
Correct. And this is an item of just very major frustration on our part. The Streamlined program contains the same eligibility requirements that the Offshore Voluntary Disclosure Program does. Just like with the Offshore Voluntary Disclosure Program, you're ineligible to go through Streamlined if you have any current audit or investigation opened against you. But there are a lot of circumstances in which an IRS prosecutor would have information about you and you wouldn't know it. So you would have no way to know that you're ineligible to go through this program until you submit everything. So for the offshore voluntary disclosure program, so the IRS wasn't dealing with having to reject applications all the time because it already had information about people, it instituted a pre-clearance process where you could get that reassurance that you would be accepted into the program. Streamlined, when the IRS instituted the Streamlined program, it did not create a pre-clearance process for the Streamlined program. So for people who don't do what we do, would just submit and pray. You submit, you hope that nobody already has started an investigation, however wrongful it may be, and hope it all works out okay.
And I think we had a specific case where we had a client who was 100% streamlined, non-willful and everything, 100% streamlined, and it was our procedure at the time because we saw this issue that, okay, even though this client is not going to go OVDP, this client's going to go streamlined, we're going to go and submit an OVDP pre-clearance request, even though full well going to go streamlined. And what happened with that one? Do you remember what happened? Because I think you took the call.
The pre-clearance request was denied.
And why was it denied?
The IRS can't tell us.
Okay.
The only reason that the IRS can't tell you is because there is a prosecutor who is currently holding your client's case file, but they're not allowed to tell you that.
Did you talk to that prosecutor?
I did not.
You did not. Now, didn't we have another one?
We did have another one where we submitted the pre-clearance request and it did not get denied.
Okay.
The first response I got back on that pre-clearance request was the Department of Justice prosecutor who was investigating all the clients at that particular bank.
Okay.
And who called me up to discuss my client's situation with me before they gave us the okay to go through either the OVDP or the Streamlined program as we saw fit.
So, I mean, there it was really important we broke the rules because
Correct.
Otherwise we would have made a submission. At what point would that submission we make be after the grand jury indictment? That's not what we really want. We want to kind of have it done before that. That's the whole point. And again, and this is somebody who's non-willful.
Completely
Completely
non-willful.
non-willful. So that would be, I think, having an actual streamlined pre-clearance process would be incredibly helpful.
Correct.
Our next thing is separate out tax advisors for data collection purposes. Okay, right. I remember talking about this. And it was kind of what we were talking about before. The IRS is asking for information, real helpful information. But who at the IRS is going to be going through narratives to say, oh, here's somebody's name here, here's somebody's name here? I'm assuming they have database systems that work kind of like ours where you can populate fields, see if names pop up a lot of times, right?
Presumably.
Presumably,
Well,
right.
I mean, in the narrative section for your Streamlined program, you have to declare if there was a tax advisor, tax preparer who was aware of your foreign accounts and advised you with regards to them in some way or another. And in a lot of the cases that we deal with, the tax preparer's involvement, and it was not asking. They never asked their client, do you have foreign accounts? This was very common.
Yep.
But every person who's going through the Streamlined program has to indicate those tax preparers that they used that in some way contributed to these accounts not being declared. Well, currently it just states include the contact information for any tax preparers or tax advisors involved. So in the middle of this paragraph stating how this tax preparer advised the person, they have to then just put in the tax preparer's name and contact information. Now, I don't really expect that the people working in the Streamlined program are going to independently pull out that information and type it into some sort of database. But if they just had boxes for list each tax preparer you used and how they contributed, what advice they gave you, etc., then that information would be very clearly identifiable and presumably be used by the IRS for some sort of re-education program, investigating people who are doing things they shouldn't have been doing, but, in short, making the information useful.
And I mean, really, talk about making the pros so ugly, having to put in information like that really interrupts the flow.
It does.
Yeah. So what else we have is another, the same issue we have. Where's the professional declaration on this page? Are we
Correct.
having the same issue?
I draft the certification forms for our clients. Attorney Hansen does as well. So when we're drafting these forms, we're writing in our client's explanation of circumstances. Currently, the client signs it, and they certify that the information that we relayed about their tax liability, about their circumstances, and for the Streamlined Domestic Program, about their account balances is true and accurate and complete to the best of their knowledge. Well, they didn't compute any of this. They don't know if we were wrong.
And
so they're having to sign that they certify that our work is correct. We should have to sign to certify that our work is correct.
That makes sense.
And additionally, it gives the Office of Professional Responsibility at the IRS the ability to identify tax professionals who are taking people through those streamlined programs who really shouldn't be going through the streamlined programs. So far, we haven't heard about any abuses of the streamlined program with people who are actually committing tax evasion going through it. But I expect that a few people did. And a few people will go through the streamlined program who are actually committing tax evasion. I know the IRS is looking out for that. It just hasn't hit the news yet. So there's going to be tax professionals involved in those submissions, and we want to make sure that those people are identified and stopped if they are doing something inappropriate.
And I think the last thing we have on this form is a clarification of this interesting standard, the non-willful standard that we've unfortunately have heard way too much of. What is the non-willful standard, Michelle?
Attorney Hansen, I'm actually going to let you take this because you took the call from the revenue agent who first explained to us how there is now a third category. It's not just willful or non-willful. There's an in-between where you are just not non-willful.
Yes, surprising. I know if we all remember grammar school, we remembered that two negatives made a positive. So if you were not something, you were just that something. So not non-willful would mean willful, right? And the IRS always likes to go, well, we're not saying that your client is willful. We're just saying that he's not non-willful. And while I, like anybody, appreciate a good philosophical discussion about the nature of willfulness, these are real people's lives that you're creating this weird in-between category that is not well defined. It appears a lot of times to be a category that the IRS will rest on when they just don't want to say that your client's non-willful. So, and they can't say he's willful, so he's not non-willful. And it's essentially that standard. They're looking for not that the clients did something that would show that they were willful. They're looking for the little, really everyday type of things, that little failures that taxpayers and humans make every day, that they didn't inquire hard enough with their tax professional. They didn't bring it up because they didn't know about it, but they should have. They knew enough.
Because they were a doctor, they should have known.
There you go.
Right.
They're well educated. They're an executive at Google, and Google has, the #1 search engine of all time, right? You're working at Google.
At Google, you could search
and you
for
could
it.
have Googled the answer.
Well, at Google, they search for it. They don't Google.
Oh, that's right.
They don't like that. But you're right. There are literally a group of people out there who are literally too smart for their own good when it comes with the IRS. If you have too high a level of education, that's going to be a large mark against you in saying that you were non-willful because you're just too smart. Look at it. You've got these degrees, for example, in certain areas, and we're going to say, nope, you were just too smart for your own good in this situation. So not non-willful. Sorry, you get hit with a bigger penalty.
Right, that's something that we just, completely disagree with, and we need, the IRS needs to clarify to say, guys, it's willful or non-willful, cut it out. Let's just get back down to what it is. And someone's level of education, someone's intelligence has no bearing on whether or not they have a familiarity with the most complicated thing in the history of the world. That is the Bye.